Dad, what's the future gonna look like?
So I always have the pleasure of coming up here for a few minutes and telling you what the rest of us have been doing for the last year. And it's been a great year. It's been an extraordinary year. And it's so fun to see our companies, many of which are in the audience or are on display or co-invested with people in the room, hit their stride. And you've seen over the course of the summit, you saw Beta and you saw Skydio, and you see these companies that were literally nothing, ideas, concepts, formative thoughts, pretty crazy thoughts, actually. And now they're generating hundreds of millions of dollars of revenue and on their way to being public companies. And it's incredibly gratifying to be a small piece of these journeys and working with such extraordinary and talented people. But it really wasn't so obvious. And 5.5 years ago, when Ben and Cyrus and I started to go talk to people, and we would walk into a room and you'd be at a pension fund or an insurance company or an endowment, and you'd be talking to somebody who is used to structured returns or low-risk opportunities, and you'd say, we're going to do AI in the physical world. And first of all, they'd say, what's AI? I mean, the chat wasn't out, Claude wasn't out. And we're like, and what's AI in the physical world? It's like, we're going to do robots and cars and planes and all the technologies. And they just like, come back and talk to us at Fund 5. And I'm so happy that the world has come to us. Sometimes when you're an entrepreneur, when you're on the forefront of something, you have the right idea, but you get the timing wrong. And I think all of us who have started things have experienced that disappointment or that portion of the journey. And often you're vindicated 10 or 15 years later. We got it right. And when you see Jensen come out on stage and say that AI in the physical world is perhaps the most important expression of artificial intelligence that we're going to see in this lifetime. And then you map that to our portfolio and what we're doing in autonomy and navigation and robotics and automation and all of these expressions that we get to look at every day. It is a remarkable gift, and it's one that I think we're blessed to be on this journey with super talented folks. Just to quantify where we are at this point, if you look at the depressing statistics from Carta, 91% of first-time venture funds can't raise Fund 2. I am so pleased to tell you that we're through that hoop. So we've got $400 million of AUM. We've deployed 225, hopefully intelligently. I think the bottom right corner suggests that we're doing that. The average venture firm 5 years in has about a 30% loss ratio. We're sitting at 1%. But most importantly, a lot of people come up to us and say, you guys do cars, you do planes, you do rockets. And we're like, well, we do the things that make that possible. And I think the data is at this point incontrovertible and really powerful, that 92% of our portfolio is software first, 68% is AI centric, and we've also been insanely disciplined. The average pre-money for all of our investments is 31 million. The average for our peers is 94 million. That's led us to be sitting in the somewhat enviable position of having a top quartile fund in Fund 1. So feeling really, really blessed. This would not happen without extraordinary people, and each year we try to augment the team we have and to get better in every dimension, and this year is no exception. David and Brian, who you'll hear from shortly following me, doing a wonderful, wonderful new strategy. Ben will draw that out in some great detail. Liz is one of the team members in our new Abu Dhabi office, alongside Nick. Nikki, not to be confused with Nick, is our head of strategic marketing, and again, differentiating from the work that Luciano does. Nikki focuses entirely on drawing out the absolute core strategic intent of each of the companies and working with them to develop their messaging and branding in such a way that we were able to articulate a powerful story. And Simon, a long-time venture professional, has joined our finance team. What I would really ask for us for a moment, we've got a great group of people here. I hope you've seen all of them, but if Ali and Jacob and Alex are in the audience and they could stand up for a moment, they are the people doing all of the really, really hard work. In an average year, we're looking at 1,500 opportunities, and we have to cull that down to the 5 or 6 that we actually participate in. Look, we had a great year in 24. We had a lot of markups. It continued in 25, and some of the companies are growing incredibly quickly. Just to give you a sense, Point One just concluded a financing that was largely preemptive by one of the best investors in the world. It's up 3x from the last round. We're sitting at about 5.5x on the total investment. 2 of our other companies, one of whom's here today, Beyond Math, got preemptive term sheets in the last 2 weeks. So I think people are really recognizing the value of this. But let me tell you one quick story. There was a company that presented here 2 years ago named UnitX, a very young, very ambitious, somewhat naive founder named Kevin. And he came up on stage, and I had recently invested. I'd gone to see the product in his mother's garage in Sunnyvale, California, parked next to the washing machine. And he said, "I'm going to be the largest robotics company in manufacturing." And I kind of laughed, but it was a really cool product. He has killed it. I am pleased to tell you that he has now 1,000 robots installed on production lines at the largest manufacturers in the world, including Tesla, BYD, CATL, General Motors, General Electric, and it's growing 4x. It is a rocket ship. And he texted me last night at 11:59 California time to tell me that they had closed the final deal to make the largest quarter in their history. And that is so emblematic of the kind of people that we want to work with, that we get to work alongside and get to help. We're in Fund 2. We've made a slew of investments, and the crazy thing about Fund 2 is I think it's going to be a lot better than Fund 1, and Fund 1 is pretty darn good. We expect to exit the year at a very significant markup, and we've been investing for about 9 months. But just to give you a sense, you saw Havoc on stage talking about their autonomous sea vessels. One of the other companies in the room, or 2 of the other companies in the room, Infinite Form, is going to revolutionize the way parts are designed. It automatically allows you to optimize a design instantaneously for die casting, injection molding, CNC machining, additive manufacturing. They have 50 pilots with the largest customers in the world, such as Gulfstream and NASA. And as the CEO, Michael, said to me the other day, everyone in this room can be a customer of mine. Wake Cap, Hassan is here all the way from Saudi Arabia. This is a company that is revolutionizing construction intelligence, construction safety. There's over 125,000 workers deployed. If I was a betting person, I would suggest that this is going to be the largest IPO when they're ready that comes out of Saudi Arabia in the history of technology there. Fantastic entrepreneur, gigantic opportunity. UCR, they were going to be here. They were going to bring their humanoid robot designed for hazardous environments, oil rigs and factories, not considered like for home care, but they actually had such a large opportunity with TSMC to automate their semiconductor factories that they chose to skip the summit and bring their robots to the factory. They're so sad that they couldn't be here, but they'll be here next year, they said, with TSMC. So we're feeling incredibly good about how this has started and where we're going. Perhaps the thing I'm going to end on before I bring George out to chat for a bit about the state of the industry is we made a strategic decision 2 years ago that if we were going to look at some other region of the world that was ambitious, that had capital, that had a young population, that was attracting talent from all over the world to create new technology companies, where would that be? And we looked at, the obvious places where we're going to look deeper into the US, we were going to look in Asia, we looked at Europe, and what we concluded very quickly was that the GCC was the only place that we were going to focus. So I have made about a trip a month for the last 2 years, and I'm thrilled to tell you that has resulted in an extraordinary set of relationships. We now have formal partnerships with one of the largest sovereign wealth funds in the world. We have dynamic, deep relationships with the most important family offices focused on trucking, transportation, automotive, aerospace in the GCC, across Oman, Dubai, UAE, Abu Dhabi, and KSA. And we've opened an office in ADGM, and Nick and Liz are spearheading our efforts there. We think that AI in the physical world is going to be expressed incredibly powerfully in the United States and North America and the GCC, and we intend to be deep, deep participants in that ecosystem. I am now going to bring out my dear friend George Kellerman. And George is the head of Woven Capital, which is Toyota's incredible CVC. And as you know, Toyota is helping sponsor a piece of the summit. There's their hydrogen car. They're working with Machina Labs. But George is a huge industry veteran. Give it up for George.
Thank you. Hell yeah. I've been waiting 4 years to say that on stage.
So, George, you had some big news yesterday.
Yes, a lot of themes similar to what you were just talking about. We announced Fund 2. Fund 1 is an $800 million growth stage fund backed by Toyota. Fund 2 is a second $800 million fund. So we're really doubling down. And when you talked about the success of your portfolio, similar theme, 80% of our Fund 1 companies are in active collaboration with Toyota. And that's one of our superpowers. Pardon the automotive pun, but it's the turbocharger for Toyota and for the startups that we work with, because we actually collaborate with them. We made a press release, or rather Machina Labs made a press release yesterday about their partnership with Toyota. So it's a really, really exciting time.
And George, how do you see, Toyota's an old line company.
Over 100 years old.
So
yeah.
How do you see the management embracing some of these new technologies? I mean, Japan historically might have been considered slower to adopt things. You're driving Silicon Valley DNA with a huge hypodermic needle into the company. How's the reaction?
Well, it starts at the top. In 2018, Akio Toyoda, the chairman of Toyota, announced that he wanted to transform Toyota from being an automobile manufacturer to a mobility company. And our mission is mobility for all, really bringing mobility for all. But I want to be really careful. This is a mobility summit. You're a mobility fund, transforming the moving world. We define mobility at Toyota as the mobility of people, the mobility of goods, the mobility of data and information, which brings in AI and software. And then the fourth one is the mobility of energy, so molecules and electrons. And that really opens up the door for us to invest in all the different areas. We've invested in Stoke Space, which is here at this event. And we've invested in UP.Partners. And the best news about being able to launch our Fund 2, it means we're going to be able to invest in your Fund 3.
Which we are incredibly grateful for. Tell me about your partnership with Joby at the Toyota level and how that expresses.
Yeah, so Joby actually predates Woven Capital. We have a sister fund called Toyota Ventures. They do seed and Series A investments, and they actually were a very, very early investor. And then they did a follow-on investment and brought them to Toyota, and there was a discussion around collaborating on the manufacturing. Toyota has enormous manufacturing capabilities, but not in aerospace, especially when it comes to type certification and the type of manufacturing discipline and rigor that you need in order to manufacture for the aerospace industry. And so Joby represented an opportunity for Toyota to expand into that industry. And then eventually Toyota did a $400 million investment off the balance sheet. And then last year they did another $500 million investment off the balance sheet.
Incredible.
So one of the things I was just going to mention very quickly is Toyota Ventures is doing the early stage, the seed and Series A. We can come in and we basically start at Series B and later. And then when it gets really big, we can go to the balance sheet. So Toyota's really, really leaning into this space.
I want to step back for a second because there's a stigma about corporate venture capital. And if you're a snobby, small boutique firm in Silicon Valley on Sand Hill Road, and someone says, I'm at XYZ Corporate, there's a little bit of a hesitation sometimes. One of the things that's so cool about George is two of the very best CVCs, corporate venture capital firms, are Yamaha and Toyota. They're the most forward-looking, they're fast, they're nimble, they have great people. And there's a common thread, which is you pretty much started both of those in Silicon Valley.
I was the founding COO at Yamaha Motor Ventures, and thank you for that call out. And I think there's something that gets missed a lot. You're right, CVC often does have a bad reputation, and I think it's a well-deserved bad reputation in some circles. But many people don't realize the average life of a CVC, a corporate venture capital unit, is only 4 years. And so Yamaha Motor Ventures is celebrating its 10th year anniversary. Woven Capital is now celebrating its 5th anniversary. We've now had a second fund. I know Yamaha is also, I think they may actually be on Fund 3 now. And so it's a testament to building that foundation, really a founder-first mentality. We actually have a team, and several of our teammates are here. We call it the Portfolio Success Team. Their KPI is to ensure that the portfolio company is successful. Toyota can take care of itself. We as an investment arm don't need to make Toyota's business better, but we need to make sure the startup.
So one of the wraps on corporate venture capital is I'm at Giant Corp, and my pitch to Michael in the front row is if you take money from Giant Corp, I'm going to get you into the parent company. I'm going to get you distribution or sales or into our factories. How do you work? You are good at that at Toyota. How do you manage that relationship and bridge that gap?
Yeah, and there's another layer to that most people don't see, and that is we can make those relationships. And in fact, that's where our portfolio success team really thrives. We embed them in the business. So we actually have people in Plano, Texas. We have people in London to cover Europe. Their goal is to really be close to the business, understand the business's needs, and so that we can have that very close collaborative conversation. But what a lot of people don't realize about CVC, and this is why they get a bad reputation, is there's no one at the factory level that has 50% of their time allocated to helping startups. They've got their existing projects, their existing business, and so you have to really come to them with a value proposition. I can make your job easier. We can make your business, whatever that is, more efficient. We can help you accelerate time to market, expand into new markets. So it's almost about selling to the corporate businesses, not just the business, but each business unit has their own product, their own service, and you have to speak their language.
Well, you've done a great job. I mean, the portfolio's killing it. I mean, there's some things that we feel like we've missed, and we'd love to have that chance for a do-over, but I know that we're working on a couple things together now.
Absolutely.
And when you think about the changes going on inside Japan, how is that changing the expression of how and where you're looking to invest?
Well, Japan, I when I first went to Japan, I was a firefighter in the Air Force, and Japan was the second largest economy in the world at that time. And I thought, you know what? I'm going to teach myself how to read, write, and speak Japanese because this is going to be very valuable. Well, I'm sitting here today because of that, and Japan's always kind of quietly been there in the background. China has definitely come up, but Japan is not down and out. They have a lot of talent. They have a lot of engineering capability. They have a lot of manufacturing capacity. And a lot of the companies like Toyota realize that now is really an important time, or they will slip further behind. And so that's why Toyota is doubling down with our fund too, and really doubling down on things like hydrogen and electrification. When you talk to Akio Toyoda, he says he wants to create a factory where we manufacture happiness for everyone. And that's mobility for all, whether it's a disabled person that can't drive, or it's a teenager who doesn't have a license yet, or it's going to space. Whatever that happens to be, we want to be able to create mobility for all and make people's lives better.
Well, on the note of creating great happiness, I'm going to thank you for your time and energy. Turn the stage back over to Cyrus and our next guest. Thank you all for coming. We know it's a long way. We're so grateful for your attendance.
The future is going to be awesome.